Hello everyone, Dave Landry here from DaveLandry.com, and this is Trading Simplified. So what are we talking about? Well, a while back I talked about showing you my next 100 trades, so I've got a quick update on that, or lack thereof, and that'll make sense in just one second. A few weeks ago I talked about the importance of being a performance-based investor, and that's just using simple technical analysis, and I'm going to talk a lot about that. I think it's very important given the nature of the market and being prepared for the next disaster. I want to talk about patience. It's something I talk about quite a bit, and right now it's extremely important given the nature of this market, and I probably won't get through all I want to cover, so we'll just pick up on that in upcoming weeks if not. Anyway, housekeeping, I do take requests. You can send them to davelandry.com/contact. It makes my job a lot easier knowing what I'm going to cover for the week. If it doesn't fit into this venue, I do a weekly webinar every Thursday night. Right now, that's at 6 Central. And you can go to davelandry.com/webinar to register for that. Register even if the link, or the date, I should say, is old. If you want the slides from this presentation and all the other presentations combined, go to davelandry.com/StockCharts. You can also reach me on Twitter at DaveLandryTRDR, which is kind of a lame handle, I know. I need to work on that. All right, a while back, somebody had said, hey, that's great, Dave. You showed us a big winner. How do we know you're actually doing this and you're just not showing us a winner here and there? Well, I got to thinking, what if I just showed you my next 100 trades, and these will come with zero hindsight from either the mystery charts, which I show here in this show, and those come from my trading service, or Facebook post to Dave Landry's Trend Trader. So everything will be announced ahead of time. You'll have to either be a member of the trading service or my Facebook group to see those. And I will show everything warts and all, and there will likely be some losers. Boy, if they're not, I'd be pretty amazed myself in the next 100 trades. Jeez. And this week, well, we don't have any to show. Last week I had one to show, and now there's none to show this week, but that's okay. That's the importance of being patient. I'm going to beat that dead horse in just 1 second. All right, let's talk about performance-based investing. As I've said before, when it comes to technical analysis, forget about all the mumbo jumbo, and there's a lot of mumbo jumbo out there, believe me. If you boil down technical analysis in its purest form, it's just simply performance-based investing. You want to buy things that are strong, you want to sell things that are weak. As I often say, if you have 4 employees and 3 are busting their butt and 1 is sitting on his or her butt, then you would likely fire that one that's underperforming. You wouldn't say, hey, maybe next week or the week after they might start performing. Let me fire one of these other guys because they're probably going to stop working anytime. But that's exactly what people do in the market. It's just the opposite of what you should do. Now, way back last summer, J.C. Peretz said something that I really, really liked. And I don't know JC. I was just introduced to JC through the StockCharts shows. And I really like what he said about this. He said, hey, you know what? I like Bitcoin above 30,000. And below 30,000, that's someone else's problem. So I thought that was a great way to talk about markets, especially the someone else's problem thing. And it reminds me of the Mr. Chow from The Hangover. Not my problem. And then he said some very vulgar things, which are very funny. My wife was rewatching on the plane once, and a little old lady leans across the aisle. She's like, what are you watching? Oh, no, you wouldn't like it. My wife finally told her, and anyway, the rest of the flight, we listened to her giggle, and it was quite funny. Anyway, now, last summer, as you guys know, I did a presentation called Before the Bomb Blows Up. And the market was making new highs, and the reason I wanted to do it then was because everyone contacts me when the market is down 30 or 40% or more, freaking out, asking me what to do, and the bomb's already blown up. It's kind of puts me in a darn if I do, darn if I don't situation. I could end up doing a lot of harm to these people. But if you could think about these things before the bomb blows up, you can avoid the next disaster. So I use the word next disaster in here because it looks like we're already in the middle of something now, right? So just know that sooner or later the bomb will blow up. And I covered all this in the weekend chart, so I'm going to kind of rush through it. Now, you could be an investor. There's nothing wrong with being an investor. When I tell somebody I trade, although I do too many day trades, admittedly, but when I tell somebody I'm a trader, they think I'm in here hitting the button like the rat going for cocaine. We actually have a position, I'll show you in 1 second, that we've been in for about a year and a half. So you could be an investor, but just be a performance-based investor. Now, I don't know who said this. I should have looked it up before the show, but I will eventually. All asset classes will lose 50% or more of their value at some point in your lifetime. In my lifetime, I've seen stocks go down 50% at least a couple times, and I've seen some 30% drops in stocks overall. I've also seen cocoa half, lumber half, gold half, just the list goes on and on. Pretty much every asset class has already lost half of its value or more at some point in my lifetime so far. Anyway, you have to have an Uncle Point or be willing to lose 50% or more of your money. And one of my buddies, who I've been trying to tell him things are getting a little iffy in here, and he told me his guy's getting more aggressive now that things are low. And I'm like, okay, great. And the market bounced a little bit, and he fell pretty good. Then the market begins to sell off again. I said, hey, you know, I have another sell signal, a little system I follow, which I'll show you in just 1 second. And he's like, oh, and now he seems to be taking notice. Well, what did I say? People don't take notice until they're down 30, 40, or 50%. And he says, well, what's the worst can happen? I said, well, you lose half your money, and it might take 25 years to come back. And I don't think he's got 25 years to wait. And I know he has some big plans that he wants to do over the next couple of years. And I think that would throw a wrench into his plans. Anyway, before I digress too far, stuff that's going down is not performing. Duh. Now, don't buy because a market is low. And like I said, Fiber Guy was in here a few weeks ago selling fiber, and he goes, what's those red bars? Does that mean it's going down? I'm like, yep. He goes, so now's a good time to buy, right? I'm like, no. No, don't try to catch a falling knife. And as I often joke, it's often darkest right before it gets more dark, as I've showed many times before. NASDAQ was down about 50% in the year 2000, and then it dropped another 50-something% from there. So don't buy just because it's low. And as I've often said, too, I was in a presentation once overseas, and somebody was suggesting that anytime a market is down 50%, you sell puts. And I'm thinking, boy, that's a bad idea. Look no further than the NASDAQ in 2000 to see what could have happened. To those who aren't familiar with such a strategy, anytime you sell an option that's not covered, you have the potential for unlimited loss. Now, it's time for say hello to my little friend. And a little friend is the 30 EMA. I've always been fascinated with EMAs. I know you want to party with me. And I did a lot of research way back in the day of the 20 EMA. In fact, I wrote an article for Stocks and Commodities called the 220 EMA Breakout System, and that was in 1995, I think it was published. I wrote it a little bit before that. Anyway, you could check that out, watch my prior shows here, or get the slides, and you'll get the rules to that system. But anyway, in more recent times, I've been looking at the 30 EMA quite a bit. And one of the things that kind of led me to the 30 was the fact that the cryptocurrencies, I noticed that they tended to do well above the 30, and below the 30, there's someone else's problem. You want to avoid them. So looking at the 30 EMA, borrowing a line from Mr. Peretz, if the market is above the 30 EMA, I might like it. And the reason I say might is I'll show you in 1 second a case where it was above the 30 and I didn't like it. And if it's below the 30, it's someone else's problem. Now, taking the 30 one step further and looking at the Landry light, if the Landry light is green, I might like the market. And if it's red, it is someone else's problem. Now, remember, the Landry light is simply if the low is greater than the moving average, okay? And you can set it for the 30 EMA for bigger picture, longer term analysis of something like the S&P 500. I might look at a 200-day or a 50-day simple just to kind of check it out. But in general, I like the 30 for pretty much every market. And red would mean the highs or below. That's it. That's the entire indicator right there, or as I like to call it, an illustrator, because it shows me, okay, look, red, that's bad, right? It shows me what's already in the chart. Well, just look at this chart. It's headed lower, right? And again, you can see the highs are less than the moving average, so the Landry light is red. Now, if you want to take a bigger picture, weekly view of where I might like a market and where it's someone else's problem, look at the proper order of the bow ties, okay? So down here I have the proper order indicator, or as I like to call it, illustrator, because it just tells me what's in the chart, right? You can see right here the 10 simple was greater than the 20 exponential, and the 20 exponential was greater than the 30 exponential. Those are the bow tie moving averages. And you can see that it was green when that occurs. When they flip over to the downside, it turns red. Downside proper order means the 10 is less than the 20 and the 20 is less than the 30. And when they're meandering back and forth, either switching from uptrend to downtrend, downtrend to uptrend, or the market is just chopping along and it's consolidating, the illustrator will be yellow. Now, one thing to caution you about, and as I've been saying quite a bit, is this illustrator did a poor job, the bow tie moving averages that is, did a poor job on a weekly basis back during the pandemic because it took a while to catch up. Now, lag is okay if a market kind of gradually rolls over like we had sort of slowly unwind in 2022, although if you're in the midst of it, you're probably thinking, boy, this market is just crashing. Well, it actually took a long time to kind of roll over, and I've showed that in presentations. Usually during a crash sort of situation, you have time to get out, and usually a lot of sell signals will trigger. Now, this sell signal didn't trigger, but we had other sell signals trigger the pandemic, such as the TFM 10%, which I'll show you in 1 second. So when the market is nice and green on a weekly basis, meaning that the 10 simple, again, is greater than the 20 exponential, and the 20 exponential is greater than 30 exponential, I might like the market. But when it begins to turn yellow and appears to be rolling over, and especially when it turns red, then it becomes someone else's problem. Now, getting back to the might like a market and performance-based investing, I probably will like the overall market if it's within 10% of its 50-week closing high, and that's this little line here. It's not an indicator. It just tells me how far away we are from the 50-week closing high. Now, it's not an indicator. It just takes the 50-week closing high, in this case, it would be right here, and takes 10% from that. Subtracts 10%. And as long as we're within 10% of a 50-week closing high, bases the S&P 500, the market is generally healthy. And this is especially true if it's also above the 50-week simple moving average. In fact, the entire sell rules, the buy rules are a little bit more complex, but the entire sell rules are simply a close below what I call the buy line, the 10% line if you prefer, and that close is also below the 50-week moving average. So you can see right here, close below the 50-week moving average, but not the buy line. So it wasn't a sell, although the market obviously was beginning to look iffy, especially if you're looking at a daily chart. But you can see 2 weeks later, it did close below both of those, and that created a sell signal. So if you look at the bottom, this is just a histogram to tell you how far away you are from the 50-week closing high. And as long as you're within, again, 10% of that 50-week closing high, the market can be seen as performing, or performing well, I should say, or at the least, it's okay. Now, when it drops below that 10% level, and especially if it also closes below that and the 50-week moving average, then the market has become questionable, and that's this whole sell signal for this system. This system does not go short. It was designed to get you out of trouble for the occasional quote-unquote diaper change moments. Anyway, you can see we had a repeat sell signal here. There was a buy in between, and I talked about that signal. I didn't get too excited about that signal. First, I didn't even see it until somebody in my Facebook group pointed it out because it wasn't very obvious. And second, the market had already begun to roll over. And my big fear was that we'd rally just enough to trap everybody in. So it was doing better for a little while, as you can see. But then it began to roll back over. So better is when it's within 10% of its 50-week closing high, but unfortunately it rolled right back over. And it's not looking so hot, obviously. And now we're a long ways away, as you can see, from that 50-week closing high. 68% of the time I took this snapshot. Now let's shift gears and talk about patience. And if you're patient as a trader, you're going to do really, really well. I am not a very patient person at all. And society makes us that way. This microwave society we live in, I mean, literally, my microwave is slow. I bought a brand new house, brand new appliances. Didn't think that I had to research a microwave. I thought they were all the same, right? And it's just painfully slow. So this microwave society, so-called microwave society, really has us impatient. And patience, as defined by Google, is the capacity to accept or tolerate delay, trouble, or suffering without getting angry or upset. Leo Tolstoy once said, the two most powerful warriors are patience and time. Now, I wanted to show you, this is the open portfolio from my trading service, and I took this snapshot last night. And you could see we haven't had a setup posted since April 21st. So we're closing in on 1 month of no setups. And you might be thinking, well, why would I pay you to tell me not to do anything? Well, what have you done over the last month and how has it worked out? And I'm not picking on you, but I'm just saying that the database hasn't produced a lot of setups that are meaningful, especially when you take them in context of the overall market. So I'm willing to wait it out until things improve. And that might be tomorrow, it might be the next day, it might be next week or later next month. And it took me a long time to learn that you don't have to take a lot of action all of the time. Take action when necessary, but for the rest of the time, sit on your hands. As I've said quite a bit, years ago I was involved with one of the first websites out there for financials. I think it was Us and Market Watch by CBS. So that was it. And anyway, I learned really quickly that people crave action. I had a trading service, and when I didn't recommend anything, the salespeople would call me up and beg me to recommend something, because they didn't lose a whole lot of clients when I recommended stocks that turned into stinkers. They lost clients when I told them not to do anything. So that taught me early on that people are craving action. So you're going to have to give yourself some time to learn. And the question I always say is, how long did it take you to become a doctor, lawyer, automatic transmission mechanic? And a few weeks back, I did a presentation in the Week in Charts where I showed, okay, might take you 3 or 4 years to become an automatic transmission mechanic, a good one. It might take you a little bit longer to become a plumber. It might take you, let's say, 8 years, maybe 9 years to become a lawyer, 10 years for a doctor, et cetera, et cetera. And the point of the presentation was, okay, it'll take that long to become successful. But if you tried to do all of those things at once, become let's say a doctor, lawyer, and automatic transmission mechanic, it might take you 30 years if you ever become all three, if you try to do them simultaneously. So the thing is, there's no career path when it comes to trading. Unlike a plumber or pretty much any other career out there, there is a defined career path. And my question is, maybe there is a career path if you learn the methodology, a simple methodology it is, the money management, and of course, mind, have the right attitude to accept what is. So as far as a methodology, I would suggest you find a simple pattern and then grail hunt long after you find something simple that works. And then make sure you study at least 100 examples of that pattern historically. Now, don't just focus on the winners. Play devil's advocate too. Someone presented something to me. They thought it was a holy grail, and they actually hired me on to help them with it. And I noticed really quickly that a lot of his signals were coming off of a moving average that would turn up or turn down based on the next day's prices. In other words, an event that hasn't happened, but in his charts it already did. So make sure you play devil's advocate when you're doing those things. Observe it in real time. Now, in a lot of these presentations, you may have noticed that I beat the dead horse. And if you haven't and you watch a few more, you'll certainly will. And the reason I beat the dead horse so much is I could say things until I'm blue in the face, and it seems to get nowhere. It reminds me of the story of Anthony Robbins, who once talked about this preacher who kept saying the same thing over and over and over again. And finally, one of the parishioners pulls him aside after the service and says, I can't help but notice that you're saying the same thing over. He says, yeah, I'm going to keep saying these same things over and over until you people get it. And that's kind of the situation I often find myself in. And one of my clients a while back told me about this bar rescue where there was this pirate bar that was failing miserably. The owner was $250,000 in debt. But they were having a bunch of fun, acting like pirates every night. And one guy actually was blind in one eye and wore a patch. And so it was a real patch. Anyway, this is what the bar looked like before. And the bar rescue guy went in and saved the bar. And then this is what it looked like after. So after all that work, they went back to what wasn't working. Now, I often preach, keep things simple. And as I preach, other than the occasional moving average, which gives me the Landry light indicator, so to speak, or illustrator. In fact, I usually don't actually plot that at least until I study a blank chart first. I always study a blank chart first. So I really don't use any indicators whatsoever. Those are kind of more like illustrators. They show me what's already in the chart. And again, I always look at a blank chart first and foremost. So I preach this over and over again. So this is a post that was in my Facebook group, and I noticed this guy had a couple of moving averages on his chart, which is fine. But then he had some kind of trend indicator, which I'm not familiar with, not sure what he's doing there. And then he also has this retracement plotted out here, and he's got a stochastic down here and a Wilder's RSI. Now, there might not be anything wrong with all these indicators, but this is one of my clients who is looking to learn from me, and he's newer to trading. And what do I preach? Use a blank chart other than the occasional moving average. Again, I don't use any indicators. Now, I'm just noticing he's using a 15-minute chart. So obviously he's looking to day trade when he really should learn how to position trade first, and also should learn how to position trade without all these indicators. Now, I'm not implying that I'm the grand poobah. My point is that this is someone who's looking to learn from me, and what do I preach? Blank charts, trade the daily charts, and then venture out into some of these other things once you're successful doing all that. So you're going to have to give yourself some time to learn. Getting back to patience, have you experienced a variety of conditions? And one would be a print money phase where you feel like God. Another would be a phase where you just couldn't hit the side of the barn. And believe me, it happens. Spellable silent SH. And then there's also a phase where you grind it out. You lose, you lose, you lose. You win, you win, you win. You lose, you win, you lose, you win. And those could be the tough times. But if you power through it, eventually you'll get the hang of it and realize that there's all these different cycles out there. Now, there's two types of patience. The patience is to let the market come to you, wait until conditions improve. And then the other one would be once you're in a position, let the market do its thing. Livermore once said, it was never my thinking that made the big money. It was always the sitting. And there's different ways that this has been interpreted. One way is sitting and waiting for good conditions. And the other way was once he took a position, sitting and waiting for it to move. And both of those are very important. So whichever one it is, it doesn't matter. Money is made by sitting, not trading. Don't give me timing, give me time. Once you start putting Livermore very hard to stop, and here we go again. A man may see straight and clearly and yet become impatient or doubtful when the market takes its time about doing as he figured it must do. The market does not beat them, they beat themselves. Because though they have brains, they cannot sit tight. So here's an example of sitting tight. In this case, we had to wait for an entry. And then you can see once we're in it, we did take additional profits in this position, but we had to wait as it drew down, and then it took off. But then what happened? It just went mostly sideways forever. Very boring during this period of time. Very hard to wait and wait and wait and wait. And then finally it took off again. Now, if we fast forward this, going back to the end of June, which was in the last chart, you could see that we went back to waiting, and then some more waiting, and then a lot more waiting. And then during this big drawdown here, there was a tremendous amount of waiting and stress. Obviously, more waiting, you get the idea. Now, I'm not just saying get in a position and hold on forever. What are we? We are performance-based investors, so we had a trailing stop in place in this particular case, and in all cases, I should say. So we're still in it via trailing stop. So again, this is performance-based investing. As long as it performs, we stick with it. When it underperforms by stopping us out, then so be it, we are stopped out. Well, that's all my time for this week. If you need the slides from this presentation and all the other presentations, davelandry.com/StockCharts. I'll also give you enough stuff to keep you busy for a long, long time. If you reach me, davelandry.com/contact. I want to thank everybody for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.